Hello everyone, it's Evan here from the Trade Risk, and this is your stock market weekly update for Friday, February 2nd. Lots to talk about today. Let's get into it. Hope everybody's doing well out there. We had lots of data hitting us, lots of catalysts. We had big Mag7 earnings out this week. We had the Fed out giving their update, and we also had jobless or job numbers coming in on Friday. So let's kick off here at the top. Mag7 earnings in aggregate, I think the market was pretty happy with. There were some losers. We're going to talk about those and look at some charts later in the video, but for the most part, they delivered some pretty big numbers there in terms of earnings. We did start to get a regional bank sort of flare up here, some concerns which we haven't had in some time. We thought this was behind us from March last year, but we had New York Community Bank sort of raising a little bit of a red flag there. We had the Fed out again, trying to keep the market in check. So Powell really kind of came out and just tried to, I guess, throw a little shot a little bit at the market to kind of maybe suggest that they're in control and they might not be ready to go at March. And those expectations of a rate cut in March really did sort of plummet after the Fed meeting. We also have the IPO market, which is starting to open up, perhaps. We have Reddit, which seems to be IPOing in March. So that'll be interesting, kind of exciting to get some new big heavyweights in there. We've got, Stripe on the back burner, which we're still waiting for, and a couple of other big companies. And then we still have this in terms of macro land. US dollar just really won't roll over, continues to ramp up. So lots to talk about today. Let's get into it. Stick around. All right, let's get into it. We've got some charts in front of us. We're using Warden TC2000. We've got a link in the description of this video if you want to try out the platform. They're having a coupon offer discount with our referral link in the description. We also support the platform. We do a lot of custom coding indicators, have cool things kind of built out for it. So check us out, thetraderist.com, if you are a TC2000 user. So let's get into the numbers here. In the right-hand side here, 1 week column, if you follow my mouse, we had positive in 3 of the 4. Kind of feels like a theme at this point. The Russell 2000 is once again being left behind. It is just a tale of 2 different markets. And of course, as we talked about with some of the recent stress in the smaller regional banks, is not helping the case here for the Russell 2000. But that aside, if we look just at the numbers here, basically a 1.5%, pretty even race between the Dow, the SPY, and the Nasdaq. And we did see some pretty deeply negative sessions there immediately following Powell, but dip buyers did come back in. We'll look at all of that in just a moment. You can see volatility was slightly up this week across the VIX and the Nasdaq volatility index. So we had Nasdaq up, SPY up, along with NASVOL and SPY vol up. If we take a look here at our sector performance, you can see most things were in the green this week. So consumer discretionary, communication services, consumer staples, those are your top 3 leaders this week, 3 to 2% to the upside positive. On the downside, we had energy, we had real estate, and then we had technology was on the bottom of the list here. So kind of curious. It's really, communication services, the way they split out some of that mega cap tech is what's giving that disparity here. And of course, you can see 1 month returns getting a little bit split here as well, as we have materials, utilities, got 4 sectors essentially that are now negative over the past month. And we have some double-digit gains here on positive sectors. Now, if we take it over to our smart trend filters here, looking at some of the sectors, you've got a couple of things to point out here. So basically, consumer discretionary continues to kind of pull back, although looks like it wants to start to turn up now immediately following some of the strength here on Friday. So that could be a transition up, fresh buy signal kind of moving back into positive trend here early next week, I would expect. And if we take a look here at materials, you can see kind of just chopping around, going neutral. You can see biotech still kind of moving sideways here. Biotech came out as the very fast sort of gainer this year in 2024. It has since been kind of cooling off, just range bound, not necessarily bearish behavior, but just kind of cooling off sideways and waiting for its next move. If we take a look here at market breadth, you can see Again, generally speaking, a fairly positive backdrop here in terms of 52-week highs and lows. If we look at these two stats down here below, you can still see we're getting a lot more stocks hitting 52-week highs and a lot less hitting 52-week lows. That's just a good thing underneath the hood. You want to see more of that if you want to see a good sustained market rally continue, and you want to see, again, more stocks participating. In my opinion, more stocks participating, the better, the healthier things are. You don't want to have just the concentration out there in the top biggest companies. If we take a look here at percentage of stocks over 50 SMA, notice it is kind of cooling off and actually starting to roll over a little bit. So you're getting to the point where you're getting maybe I don't necessarily know if it's worth describing it as bearish divergence, but your fast momentum to the upside here is certainly past us now in that first leg up. And it is worth noting, though, that price can certainly continue. In fact, it historically does continue to trend up while this can go down, but it is something that eventually will take a toll on the market and something we'll want to pay attention to. But for now, looks slightly heavy here. Meanwhile, price action still looking pretty darn good. If we take a look here at IBD's list, so we take the IBD 50. We're looking at the top 10 stocks. They are a sponsor of the show, so thank you, IBD. You can get access with a link in the description of this video to their IBD 50 list, and you can catch that every single day as updates happen. You can see, again, pretty strong week here of performance deck at the top of the list in terms of these stocks, and got some big 1 month gainers here. So good watch list to always have and trade with on your back burner. Now, if we take a look here at commodities this week, we got Bitcoin at the top of the list, 2.43%, pretty range bound still, but nice little comeback there. We have DBA, the agriculture ETF, and we have gold, both up around 1% this week. Dollar index, as we talked about at the top of the video, continues to be so strong. It just won't let up here. We're going to look at those charts in just a little bit. Silver, copper, natural gas, oil, all down negative this week, and especially oil. It was starting to get that nice kind of breakout, getting a little jumpy last week. We talked about it, and it just gave it all back. So we're going to take a look at that chart in just a second. Lastly, here in terms of treasury yields, we had a lot of volatility, mostly on Friday. We had some very positive action in terms of yields coming down throughout the first 4 days of the trading week, and then Friday really sort of flipped things on its head with some of the jobs data that came out, and really caused some of those yields to spike on Friday. So we are still in this kind of volatile state. Saw the move index move up on Friday, so we're going to have to keep a pulse on this. Generally, though, they were lower this week. So let's get into some of the price action here. This is the weekly chart of the S&P 500. Again, it's really a thing of beauty in terms of strength and just technical chasing happening here. I mean, this has been a lockout rally that has been pretty magnificent at every step of the way, but we did get some opportunities this week. You had to be quick. You had 1 day, but there was certainly some volatility here. It was on Wednesday. The S&P 500 was down 1.61%, which I think would be, let's see if we can throw on our rolling returns here. This has to be one of the biggest down days that we saw in quite some time. So basically, yeah, looks like it eclipsed all of that. So if we look at the S&P 500, that was probably the single worst day since maybe there was one sneaky day in here in September. But, you have to go back pretty darn far since you've seen something in terms of a single day drop that bad. So that was, of course, when that was Fed Day. That was Powell kind of coming out and really trying to strong arm the market, kind of saying like, hey, we might need more data. Data's perhaps not bad right now. We just need more of it. And March is really not going to be on the table is certainly what he was trying to lead the market to believe. And that certainly caused a little bit of panic here. Of course, we also had some bad earnings that day as well, because we had Tesla out the day before also, or was it Tesla? Someone disappointing. Now my dates are maybe wrong. Not Tesla. I'll have to check back. Oh, AMD and a few others. So yeah, market obviously, had a little bit of a flare up of volatility here, but that was it. There was no follow through here. So I think sellers got their chance here on Wednesday to really sort of crack this market and to maybe see if we could, come back in and retest this early January breakout range around 4,800. But that did not happen. In fact, we basically gapped up to start the session on Thursday. We traded pretty much entirely within the body of Wednesday's range, but we closed strong. And then with the earnings we got on Thursday out of Meta mostly and Amazon, they just continued to follow through with some significant buying here into the end of the week and Friday. So here we are again, now right back to all-time highs for the S&P 500, up 1.38% this week, and we're on a 4-week up in a row straight sort of shot. So when we look here at Bollinger Bands on the weekly chart, you can see you just got this expansion up. Price is just continues to follow it higher. Daily chart, we're starting to touch the upper Bollinger Band as well. But generally speaking, I mean, momentum here just remains fierce and strong, and anyone that, got a little bit jumpy here, kind of selling some shares, looking to raise cash, get defensive, certainly now is the latest round of participants to sort of be left behind as the market squeezes higher. So really, same backdrop. Again, can't argue with price and bullish momentum here in terms of the price action. We would love to see more breadth. Again, some of the other areas of the market to participate to keep it more sustainable. But we have really the same market we had in 2023, very top-heavy concentration of what's working in this market. If we go to the Nasdaq 100, you can see a pretty similar picture here, maybe not as strong as you can see. The S&P 500 is just clearly up at new highs, really took out sort of the Tuesday high. And if we look at the Qs, you can see it's just kind of flirting with the last week's highs. But it had the same sort of setup here. It was down 2% on Wednesday, so a big move, heavy volume, but there was no follow through. We got an inside session on Thursday and then strong follow through buying on Friday. So the Nasdaq 100, again, marching higher here, weekly chart, 4 weeks up in a row. Again, not quite taking out last week's highs, so maybe slightly sluggish here, but continues to be acting pretty darn strong in the whole. And the Russell 2000. So this is, again, where we still see a lot of reluctance. We talked about we'll look at some bank stocks here in just a moment, but you can see the Russell 2000 index down almost 1% this week, and continues to hold at least in the upper end of this range here at the bigger year-and-a-half range. So there's some benefit of the doubt. There's some, optimism you could still have if we can hold above, the January lows here around 187. I think that would be overall net constructive. So if we can hold this line here intermediate term, that would be good. And then maybe we can take another run at the 205 highs and eventually, hopefully break out of this range. But for now, it's still digesting. It's still finding its footing. And we're still waiting to see how this broader range resolves. Just keep an eye on it because there is a lot of pent up price action here, just a lot of sideways trading. So that thing will move here probably sooner rather than later. So let's not sleep on it. And that is the wrap up there on the majors. Let's go right to NYCB. So this is New York Community Bank Corp, which is probably a stock that maybe most folks don't even look at, or this is the first time seeing it. And this is certainly where some of the concern flared up this week. We had basically I believe a full wipeout or a full cut of the dividend, or almost entirely anyway, and some just liquidity concerns here. And of course, when one bank, really starts to raise concerns like this, the question is always looking around to who else is in a similar situation. What's the next domino to fall? What is the contagion factor here that could start to ripple down? And so far, it seemingly is sort of contained. We're not seeing a whole lot of other stories right now, or at least I haven't caught them yet. But if we take a look here at, say, the regional banking ETF, the KRE, you can see this is certainly where things were hit. And remember, we dealt with this, last year with the flare up of solvency in some of the banks and some of the banks going under. And so, this is certainly fresh on people's mind, and a good, again, gut check here on just seeing sell first, ask questions later in these types of situations. That's kind of what the market does. So if things stabilize here, then yes, this could possibly be a good opportunity. I have no exposure, or I'm not, trading this directly or anything, but we have to see. I'm certainly no expert here, so we'll have to keep an eye on what develops, but this certainly threw the market for a little bit of a loop here in terms of volatility and some of that sell pressure. Now, if we move over to some of the more macro stuff, rates, TLT, this was recovering pretty sharply here this week until Friday. So we're still up 2.44% here in the TLT. Heavy volume week, and it did take out the last couple of weeks' highs. So, lots of momentum tried to get going, but we did give back a portion of that certainly on Friday. So we're still waiting to see if this higher low area can hold. If it can, that's a good, sign that the long end at least can start to come down a little bit, cool off, but we'll need to see how this develops. For now, we're getting some heavier volume here, so it looks like we're going to get a little bit of range here, especially as that move index starts to move up. So keep an eye on this, but TLT starting to at least get a little bit bid, and we'll have to see if there's any follow through to Friday. We did talk about the dollar and the dollar strength. So when we look at the dollar here, so unfortunately UUP here, this is had a big dividend right here paid out. So it's a cash dividend back in December. This gap doesn't actually exist. It's just kind of distorting the chart right now. So really, when you look at this rally, you kind of have the UUP, the dollar index, all the way back up here. It's trading, probably around $30.30. So I don't think it's higher than the Jan levels yet, but of 2022. But it's certainly seeing a lot of strength. And if you just look at the weekly chart here and you pretend, this is the last 6-7 weeks, it's been essentially up, 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 and up. So this is putting obviously a lot of pressure on commodities and some different things. And this is, clearly tied into interest rates as a whole as well. So a dollar index continues to be a bit of a wrecking ball here. And last I'll say on some of the more macro stuff before we jump at some individual stock charts is KWEB, or China, FXI, right? This is starting to roll back over again. Lots of, sort of turmoil and disdain for China right now for lots of different reasons, but this is kind of rolling back over, so keep an eye on it. Active traders, a lot of volatility and opportunity perhaps in some of these stocks. You go to Alibaba, you can go to JD, right? A lot of these things just totally hammered, hitting pretty much lows. Sentiment is terrible, and nobody wants to own them, and quite frankly, I'm kind of in that camp too, just because it's unclear on lots of different levels, but certainly lots of volume coming in, and developments happening there to try and support that market. So that, I think, is everything I want to talk about on some of the bigger macro stuff. I wanted to spend the end of the video just looking at the Mag7 stocks, because we pretty much had all the earnings out of the way at this point. Minus NVIDIA, which is on a slightly different cycle. So if we take a look here at some of the Mag7 stocks, and we take a look at, it's not linked up. Let's just look at Tesla first. So Tesla, reported earnings, pretty dismal, right? We talked about that briefly, I believe, last video. But, they're down pretty significantly, right? In its kind of own, bear market, let's call it, and continues to look pretty bleak here. Overhead gap hasn't got filled. Looks, kind of in a tough spot. We also have Apple. It's not linked up. Apple, which, again, is certainly not as bad as Tesla by any stretch. Weekly chart, in fact, you could actually even say is mildly constructive as it consolidates under all-time highs, but it's certainly not, just totally ripping to the upside here. So you got Tesla, Apple, really as your two kind of weaker spots here. You could throw Google into that as well, which was, I think, the company I was searching for earlier on what brought the market down on before Fed Day. This here on Tuesday night reported earnings, and the street just didn't love what Alphabet had to say about their earnings, and sort of penalized them here, down 7%. So you can see Google is below its 2021 highs here. So it tried to break out, and now it put in a pretty high volume kind of rejection there. So Google, Apple, and Tesla are sort of the three in the penalty box right here, or the laggards, so to speak. Amazon, had a great quarter, still not quite back up Let's see, or is it just, yeah, it's still not quite back up to its 21 highs, but you can see obviously getting a nice bid here on Friday. Nice heavy volume coming in, gap up and go. So it looks like Amazon is pretty much got its sights set on. I wouldn't be surprised to see the retest of all-time highs in the next month or two. Seems like it's certainly in that direction right now and has kind of the backing behind it. Meta, though, of course, is really the supercharged story here. It's up 20% on Friday, just an absolute monster move, and it is now, you know, fully eclipsed and taken out its former all-time highs after a 77% drawdown. It is now up approximately 450%. So it's just been an absolute monster turnaround story there. Tons of earnings still coming in here. They are still losing a lot of money on development and research and some of the Web3, but you know, they've got the first ever dividend that they announced, which is not a massive amount for the amount of cash Meta generates, but you know, just an absolute monster in terms of earnings per share growth here. And Microsoft, you know, continues to perform, of course, as the largest company now, continuing to move up to its highs, 1.8% this week. And you can see, again, firmly above its 2021 highs. And so the only stock we are waiting for right now in this group is NVIDIA, which is already, you know, roaring at all-time highs, is up 30% this year, and is just, you know, got a lot of momentum and enthusiasm behind it. These earnings are going to be coming in later this month. So that's the excitement. That's the Mag7 that's really driving all this indice action. S&P just ripping, and Q's right back to those all-time highs. And those earnings are something the market likes and is really still rewarding. And this is where the money is flowing in, and those small caps are still kind of being left in the dust at the moment. So that's the market we've got, and that is the roundup for this week. So hopefully everybody had a good week out there, big week of catalysts. Thanks everybody for tuning in to another episode every Friday, long form market analysis, objective analysis that we try and put out here every weekend. You can find those links, TC2000 links, IBD links, in the description of this video. Have a great weekend ahead, and we'll see you back here next Friday. Take care.